Okay, good morning, everyone. Good morning, and good afternoon, and good evening. It's an absolute pleasure to welcome you all to day 3 of our 2020 Winter Summit and Fintech Expo. If you're logged on today looking for the Travel and Hospitality Expo, you're unfortunately in the wrong place. We're about to post a link in the chat to switch over to the correct Zoom webinar if you're looking for travel and hospitality. Once again, our biggest event of the year has gone virtual, but you know what? It's not so bad to attend this webinar from the comfort of your own home. So grab yourself a cup of coffee or download the Zoom app and go for a walk while you listen. But make sure to return your laptop by the time networking begins. We don't recommend using Remo on your phone. For those of you that don't know me, my name is Mona, and I'm the program manager for the Fintech team here in Silicon Valley. Today, we'll be kicking it off with opening remarks by our partner, George Demouni, who will then welcome Dimitri Sirota, CEO and co-founder of Big ID, to a fireside chat with some extremely exciting announcements. I highly recommend you staying tuned for this one. After that, we'll move on to the main portion of today's event, our Batch 12 startup pitches. We'll announce the winners of our FinTech Innovation Awards and then move over to Remo for some networking. So without further ado, I would like to hand it over to George for an overview of our innovation platform, FinTech vertical, and latest trends. Please welcome George.
Thank you, Mona. Really appreciate it. Well, yes, I am very, very excited to be here, everybody. Thank you for joining us virtually. Hopefully we can do it in person very, very soon. For those of you who don't know me, my name is George Demouni. As Mona mentioned, I am one of the partners here on the ventures team at Plug and Play. I've been lucky enough to be with Plug and Play for almost 7 years now. I led about a handful of our successful investments, opened up a few international offices, and I also sit on the board of Plug and Play. So again, very excited to be here, and I'm very humbled and lucky that you guys are listening to me today. So quick overview of Plug and Play. For those of you who don't know us, or it's your first time attending an event with us, we're really a lot of things, but it starts with this kind of picture. This is the first 25 or so employees of Google in front of a building in Palo Alto that our CEO and founder owns. It's 165 University Avenue. And that building actually was host to tenants like Google, Logitech, PayPal, Andy Rubin's company, Danger, when there were 2-person teams, 3-person teams, and they grew to 40, 50 people within the building. So needless to say, it's now called the Lucky Building, given all these really, really successful startups really started in this building in Palo Alto. And our founder and CEO still actually uses real estate as one of the best sources of deal flow, trying to find the best companies growing under his nose, finding the ones that are working hard or getting good traction or raising from Sequoia Capital, and then putting money right where he sees the growth happening within his building. So fast forward to today, we really are two things. One, we are an early stage investor. We're investing in primarily seed and Series A companies, and we're doing a lot of those checks. We're actually one of the most active investors in the world, writing very, very early stage checks in companies. The second thing we like to do is a global innovation platform where we connect our startups, whether they're portfolio or ecosystem companies, to our 400 plus corporate partners in this space for licensing deals, business development opportunities, investment, or even acquisition. And I'm very excited and lucky to show such a great partner list that we have. As mentioned, there's over 400. We can fit them all on one slide, but we have brands like PepsiCo, Coca-Cola. We have retailers like Walmart and Amazon as partners. We have 70 banks, 90 insurance companies. The list goes on, and honestly, it's an amazing and I think the best corporate innovation platform because of our partners, because we have such a large and robust and deep ecosystem of corporates and startups. As mentioned, we also have a fantastic portfolio. It really couldn't be done without an amazing portfolio. So today we have 12 unicorns in the portfolio, which is almost unheard of for an early stage investor like us. So names that you recognize like Dropbox, PayPal, Lending Club. More recently, companies like Hippo, which is a home insurance platform. They raised $150 million this year. Danger, not Danger, N26, which is a mobile-only bank. You guys obviously know them. Honey, that just got acquired by PayPal for $4 billion earlier this year. Rappi that just raised another 300 million, and many more. I mean, we're really lucky to have such an amazing portfolio. And in the FinTech program in particular, we've been around for 6 years now. And in that 6 years, we've accelerated 340 plus different FinTech startups. Within those, we've conducted over 217 pilots. That number is just for Silicon Valley, between corporates and startups. We've made 97 FinTech investments. These are different company investments, so almost 100 companies, but hundreds of different investments within those 97 companies. As mentioned, we have 70 plus financial institutions as partners and 10 locations now in the FinTech space in particular. Again, this couldn't be done without an amazing group of our FinTech partners, and they're listed here. I wish I could name every single one of you because you guys are all literally equally important to us. We really, really do appreciate you trusting us and being our partner. And hopefully you're enjoying it as much as we are. So as mentioned, we're taking over the world. We are in 34 offices now globally. In FinTech, we're in 10. We launched Amsterdam in June and Sao Paulo in September. And we're working on one more office in the US. Very, very exciting. So we'll share the news on that soon for FinTech in particular. And again, this couldn't be done without an amazing, amazing FinTech team. Almost 50 of us strong, dedicated to FinTech within Plug and Play. And again, very, very excited. Please, if you see any of these people, give them a virtual high five for now. If they're in your deal flow sessions or in your meetings, just give them a virtual shout out. They would really appreciate it. And lastly, 5 trends that we're seeing in the FinTech space during the last quarter. And then we'll hop into the fireside chat with Dimitri. I'm going to go really quick. The first one, embedded finance. So seamless integrations of financial products. Companies like Charge After, which is a POS lending solution with a lending marketplace on the back end, allowing lenders to literally compete at the point of sale finance. They just signed Wayfair as their marquee customer. It's an amazing technology company and backed by one of our corporate partners as well, Synchrony Ventures. Gravy, we just invested in this company. It's a very exciting company. Team that came out of PayPal. It's a payment orchestration platform for commerce online. So more to come on this company, but I would really keep our eye on this one. It's going to be pretty exciting. Second trend that's been important for our corporate partners during the last quarter is value-added services. So different products or anything that we can add value to existing customers. So companies like Even Financial that offers financial products with APIs, or even Vero, who was my old colleague, Ali Safavi. He started a company in the insurtech space, allowing any kind of insurance products, even for credit unions and banks. So really interesting ways to kind of leverage products for existing customer bases. The third topic, democratization of finance. Companies like Isuzu Financial fit into that pretty well, allowing landlords to report on-time payments to credit bureaus. And this really gives the underbanked or unbanked access to credit. Or Pay Active, which allows employees to withdraw up to 50% of their earned wages upfront with a one-time flat fee, as opposed to going to payday loans and doing it the Sharky way, if you wish. The fourth topic we're seeing, digital banking will dominate the new to banking customers. This has been an ongoing topic, even more relevant now during COVID. Jazzby, which manages that parent to child relationship with allowances, really hooking on that customer when they're really young and hopefully growing with them when they reach adult age and get their own bank accounts. And N26, our mobile-only bank, as you guys know. Lastly, infrastructure and core banking. Companies like Decentra, we just invested out of them in Singapore. Really exciting company, kind of disrupting the core banking space, API platform for banking integrations, or Modular Bank, which allows products in the form of modules. They're an Estonian company, and again, very exciting up-and-coming solutions that we saw during COVID, during this whole digitization that happened in the last 6-7 months. And really, these startups are poised to capitalize on it. I went really quick. If you guys have any questions about the trends, or if you just want to drop a line and say hi. Again, my name is George Dimoni. And I'm honestly very excited to announce my guest for the Fireside Chat. And that is Dimitri Sorora, who is the CEO and co-founder of Big ID. Big ID is a modern data intelligence platform and he's a privacy and identity expert. He is an established serial entrepreneur, investor, mentor, strategist, and previously founded 2 software companies focused on security, eTunnels and Layer 7 Technologies, that later got acquired by CA in 2013. Dimitri, if you're there, hey Dimitri.
You're in.
You're in.
I'm in.
Thank you so much for joining us, Dimitri. Really, really appreciate it.
Yeah, no worries. Thank you for having me.
How's the weather in New York?
It's cold. Winter has come.
Winter has come. Winter has come. So Dimitri, if you don't mind, can you just maybe describe your evolution as an entrepreneur? Like, what made you start becoming an entrepreneur in the first place?
You know what? My family were, like my dad and mom were entrepreneurs. They were immigrants from the Soviet Union and didn't really have education. So they kind of got by. They started some jewelry stores. And so we were always, you know, I had some business or had something going, and they're always, you know, in business. So I followed a slightly different path from my parents. I did graduate work in physics and so forth. I went to university. But I always had kind of entrepreneurialism, kind of, you know, I've been around it my entire life. And obviously I didn't start a jewelry store, but I always wanted to be in business. And I think 3 years after I graduated, I started my first business, which was eTunnels, that you mentioned.
Amazing, amazing. And then let's fast forward to today. Can you describe what Big ID is and what you guys do?
Sure. So Big ID got its start a little bit over 4 years ago, really in response to some of the changes we saw happening in the regulatory environment vis-a-vis privacy. So things like GDPR, CCPA, CIPRA, for those of you calling it from California. And what we felt, and just by background, you know, my last 2 companies, as you may have kind of inferred, were in security and data protection, and same for my co-founder. And so I think as we were kind of looking at these kind of new regulations, we were thinking about what does that mean for helping organizations understand the data that belongs to people. These new regulations essentially inverted the relationship companies have to the data that they collect on people. Historically, they collect as much as they can, almost kind of hungry hippo style, and they do with it whatever they want to do with it, BI, AI. But these regulations kind of said, no, wait a second, you could use the data, but you have to have a legal purpose. You know, you have to provide transparency back to the consumer or employee. And so there's all of these kind of but ifs. And that required an organization to effectively provide kind of greater data accountability or accountancy through data, through kind of consumer accountability. And so we thought that there was an opportunity to kind of think how people went about understanding their data to solve problems in data privacy and data protection. And that was the genesis. That's how we kind of that was the big idea of Big ID, if you will.
That's amazing. And honestly, like, you guys hit the market so well. And I remember my colleague, Kevin Parkatu, and I, we were talking to you maybe 5 years ago, and you were pitching us GDPR, and I remember, like, I was on the phone in my little cubicle back then. We were probably 25 employees at Plug and Play. We were tiny. And I literally had to Google, like, what is GDPR? Like, what is this guy talking about? Can you describe how important market timing is for starting a business like yours? And how did you guys hit that market so well on its head?
Yeah, so look, this is unfortunately, I had the experience of introducing technology far too ahead of the market needs. So my last company, Layer 7 Technology, focused on API security and management. However, when we launched that company back in 2003 or 2004, nobody knew what an API was. Nobody cared. And every time we go out, in fact, they didn't even call it API, they called it web services. And so we were evangelizing out there for probably 5-6 years until Amazon introduced Amazon Web Services. And then all of a sudden people said, oh, wait a second, web services, I kind of get that. And then the iPhone came out, I think around 2008, 2009. And people started saying, wait a second, I have these apps and these apps need to connect. And so we were kind of wandering in the woods preaching APIs and the need to manage them before anybody really understood what they were. And that's kind of an example of something where you could not time the market right? We were kind of wandering the desert, the proverbial kind of like, again, talking about this thing well before anybody needed it or anybody understood it. And so we were evangelists when, and that's a painful road. So we were getting started with Big ID. One of the things we were looking for is something that would have a catalyzing event, right? Something that would create a buying function. And so, look, I think some companies start in existing categories and they try and disrupt the categories. You see that in endpoint, you see that in data warehousing, like with Snowflake, where there's already a buying community and you're really coming in with kind of a new proposition. Salesforce did the same in CRM. We were trying to do something a little bit different, but again, without having that kind of that win, that catalyzing activity, that regulation. So we were actively looking for an opportunity to do something a bit more greenfield, but that again, there would be a compelling event to do it.
So basically, you're saying you're almost a modern day fortune teller, right? Like,
I don't know. It's somebody that's kind of like collected kind of the arrows, so to speak, of the challenge of doing something new and novel, when there wasn't a compelling reason to spend money on it. And at the end of the day, and we'll talk a little bit about what we've raised and so forth, but having a little bit of revenue early on makes a big difference, right? It attracts the A investors, and then that attracts the B investors and so forth. So you get on that conveyor belt, but it's got to start with revenue.
Right. Absolutely. And maybe we can talk about it now. Like I remember even going back when we first invested in the company, and I think you and I were talking, Dimitri, at dinner at Saeed's house, our CEO's house. Yeah. This is before Series A. And I think you were asking me, and I think I gave you the wrong advice, if I'm being like perfectly honest. Like, what should I do now? Like, should I raise a Series A? Should I go out and get revenue first? And I think I said something like, there's two ways to raise a Series A. Either one, you can go off of like your background, your hype, without any traction, for the dream of getting that traction and raise that Series A, or you can get revenue first and then go out for that Series A, which I recommended you did. I think you kind of didn't do that, which thank you for not listening to me. But if you could describe, like, early on, I know there was, it was kind of rocky, right? Nobody really understood what you guys were doing, and now I think it has a foothold, and we want to talk about it later on. But how is it starting the business, and how's that progression been for you guys?
Look, the last couple of years have been better than the first 2 years. The first 2 years were a little bit wandering in the wilderness, right? I think we had, we had folks like you that kind of got in, believed in, were willing to take a risk, the seed investors. And, we had by today's standards, we had a very small seed round. Nowadays people are doing like 7-8 million as a seed round, which used to be an A round. But you are right. I think we were, because we raised such a small amount of seed, it forced us into thinking about, do we preemptively go out and try and raise an A without having the revenue? And candidly, we did, and it failed, right? People just didn't have enough proof points to invest in us. They said, okay, great idea. Yes, there's this 4-letter acronym somewhere in Europe, but who knows what that means? So there's a lot of interest, but there wasn't anything compelling enough. And so we actually failed to do that. And in the first couple of years, we whittled down that kind of 2 million down, I think a couple 100,000 before we closed our first customer. And, I think within weeks we closed our second customer. And within 2 months, we almost had like $1 million in AR. And then, whatever investor had heard or got wind of this reached out with a preemptive A. So, it's funny, and now we have, lots of money in the bank, well over 100 million. Kind of in reserve. I like to keep a little bit there just in case.
just a little bit
for a rainy day. But yeah, I think the first little while was hard, and then when things started falling into place, it obviously became very much easier. And our A round ended up, I got the first term sheet on my way to Disney World with my family. I had to pitch a couple of more investors from the balcony in Animal Kingdom. And basically spent my time in Disney World negotiating our Series A. And then our Series B was very kind of similar. It was preempted when we won the RSA Innovation Sandbox. And so after the A, everything's being preempted, including our most recent round. It was just the seed was hard, and then getting that money before we got the revenue. But as soon as we started getting revenue, as soon as we started establishing those proof points, life became a lot better.
Amazing, amazing. And I think like this is a good transition because to the audience and to the broader kind of plug and play network, we have a very special announcement to make, I think, during this Fireside Chat, Dimitri, if I'm not mistaken. And it's one I just heard like you guys joined a very, very kind of exclusive club, like maybe something that starts with a U, like maybe a unicorn club, if I'm not mistaken. So
yeah, we did. We haven't announced it yet, so we're kind of waiting for after Thanksgiving. We figured during the election and during, announcing our kind of the fact that we're valued at over $1 billion is probably best done maybe a little bit later after all the heat of the election and even some of the COVID stuff is kind of out of the way. But yeah, about a month ago, we did again. It came together very quickly. We weren't raising, and we ended up doing our Series D. And the details we'll put out in a bit, but yeah, it did value the company over $1 billion. And look, it's a nice marker. It obviously, what today goes for $1 billion, maybe in a year doesn't. But it's a milestone in any company's evolution, especially when you consider we did our A less than 3 years ago, and about this time 3 years ago, we were down to kind of a couple $100,000, and we're in a much better situation. I think we were still 7 people, and today we're well over 200.
That's amazing. That's amazing. Well, honestly, I mean, first off, congratulations, Dimitri. It's honestly amazing to see kind of like the transition and the growth in the company over the last 3-4 years have been incredible. And our 12th unicorn for plug and play, it's just really, really incredible. So congratulations again.
And thanks you guys for believing in us when a lot of people didn't.
Well, again, like we didn't even know what GDPR was, but
there you go.
You as a founder and after like researching it and finding out what this actually meant in terms of a regulation, we knew it was going to be important. And I mean, you guys just were poised to take the whole market, and now you're a leader, right? So, and kind of like ties into my next question is, how does it feel to go like 3 years ago, almost shutting down the company, right? Like you were down to a couple 100,000 in the bank, 7 employees, little revenue, to now you're very well capitalized, market leader. You guys are winning awards, 10 plus awards a year, it looks like now. But how does that feel?
Look, I think, it depends on your kind of view of entrepreneurialism. I think at the end of the day, there's always anxiety. And I think that you always need to be kind of aware of your surroundings and your situation. And look, I candidly think that, there's that old kind of aphorism around only the paranoid survive. And I think we're always looking for, both those opportunities and those risks. And I think at the end of the day, I don't think we've reached that flywheel. We're not an IPO candidate. We have a long way to go there. We're still trying to acquire customers, especially in this era of COVID. We're thinking about where do we go next, and we've done a lot of work in terms of shifting from what I would describe as a best of breed kind of solution for a very specific use case in privacy to more of a platform. That transition is actually happening over 2020. And as part of what I think the interest that we got from investors is people are excited about that transition into more of a kind of a data platform built around data discovery. But yeah, look, at the end of the day, business is not easy. It's not supposed to be easy. It's hard because there's so much money out there. Lots of folks are raising and coming to the market. And it's very easy, whether you have the technology or not, to modify your messaging to look very similar, right? Which kind of creates, so look, I think we are very attuned to the market dynamics. And I don't think anyone is kind of sitting back, relaxing, having a beer saying, wow, that was a great 4 years, we're done. I think we realize that the hard work is only really, really beginning. And now there's a lot of attention and pressure to build this into more of a flywheel, right? To go from those initial proof points into kind of a global standard for data insights and some of the things you want to do around privacy and data protection.
Absolutely, absolutely. And honestly, Dimitri, it just speaks volumes to you as a founder. Well, even when we were texting about this round, you were saying, yeah, it's just the beginning. And it's time and time again that proves out entrepreneurs who reach this level, and it's a very, very small percentage of entrepreneurs who reach this level in their company life cycle. And I think time and time again, the theme is they think it's just the beginning, and there's so much more to do, and there's more rounds to have, more customers. It's world domination at its finest, and I think like it just speaks to you as as a founder, Dimitri?
Yeah, well, look, I appreciate that. Those are kind of very kind words. I do think that, part of it is obviously there has to be this kind of optimism in terms of where you could go and a vision, right? People love vision and story, and obviously anything you could demonstrate that you have an ability to execute on it. I do think that needs to be tempered with just the reality, right? I think part of the other things that makes entrepreneurs successful is there will be hard times. There will be customers that you lose. There will be customers that are unhappy. There will be investors that reject you. There will be, people that leave you. And I think being able to take those blows and keep going, right? And keep talking about, that vision and getting there. I think to some degree that perseverance, that being able to, that assiduousness is critical in any entrepreneur's history and kind of evolution and trajectory. And so I do think that part of it is, willing to take kind of a blow and just kind of let it roll off and keep going and learning from it and bettering yourself and bettering the company because of it.
Absolutely. Dimitri, I just learned that we need to wrap up here, but I do have some important questions for you. I want to ask you at least one question that's relevant for this audience, mostly banks. And you guys have customers like eBay, MetLife, Walmart, Costco, UBS is a customer. So, working with different financial institutions is hard, right? What do you think is the biggest problems working with, let's say, a bank? And what advice would you give, our banking partners on the line today working with startup companies?
Yeah, look, you have to kind of earn the credibility to work with financials, both small and big. I think, part of it is raising enough money that they think that you're going to not only be credible, but be around. So that if they make an investment in you, you don't disappear. I think clearly you need to be able to hit a problem that they have. And I think you need to have the infrastructure to support an organization, whether it's around implementation, whether it's around support, whether it's around training and education. And so I think part of, right now, I would say 40% of our pipeline is financials of varying size, small, mid, large. And that includes insurance and more retail banks and investment banks. And I think a lot of that is because, again, of how we got to here, right? We built out that infrastructure. We made our product enterprise ready. We made it easy to deploy in their environment or the cloud environment. We tailored it to them, but it wasn't overnight. It took us 4+ years to get to the stage where I think a lot of them could start thinking about us as a solution that they would adopt. And I think, my advice to any entrepreneur that's kind of embarking on that is you're dealing with sizable organization that have all sets of controls that are dealing with kind of various regulations kind of and regulators. And so it's really about accommodating yourself to their needs. And I think that's been kind of a journey for us. And we're only really kind of getting to that stage now.
Amazing. Amazing. I wish we had more time. I know there's so much more to talk about, Dimitri, but we need to wrap up here. Our admins are kicking us out. But Dimitri, thank you so much for taking the time. Really, really appreciate it. And again, congrats again. It's been an amazing journey and a lot more to come.
Yeah, thanks. And again, thanks, George. And thanks to the Plug and Play family for all the support so far.
All right, Mona, kicking it back to you.
Thank you so much. Thank you so much, George and Dimitri, and a huge congratulations to you, Dimitri, and the entire Big ID team on obtaining unicorn status. That's extremely exciting. So being the program manager of the Fintech team, I've been working closely with the 21 companies in our batch for the past 3 months. Throughout the program, the companies have had the opportunity to meet and learn from leaders and experts in the financial industry, attend workshops specifically catered to their interests and requests, work on their pitches and strategies, and most importantly, meet with many of our corporate partners. Today, you'll get to see the progress that they have made. Moving over to housekeeping for today's event. Following each presentation today, please fill out the poll on the screen if you would like an introduction to the startup. Our Fintech team will follow up with these introductions via email in the next couple of days. Use the chat if you have any questions for the Plug and Play Fintech team. We have a couple people on our end over here that are happy to answer any of the questions throughout the event. There will be no live Q&A for the startup, so if you have any questions, please note these and head over to Remo for networking after the event. Each startup will have its own designated demo table for you to visit. Now, moving on to the first startup pitches today. The first company will be CloudVector. CloudVector is a next generation API security company on a mission to help enterprises protect their new and increasing data risk surface by securing the APIs that connect all of their apps, users, and devices. Please welcome Leben Cheng, the founder.
Hi, My name is Lebin Cheng, founder of CloudVector. We are a team of network security veterans with proven track record building successful cyber companies from ground up. We ship our product October 2020. It's gaining a lot of momentum with clients. We are a seed-stage company. We are well-funded. We are planning for a round raise in early 2021. API takes center stage as the fabric connecting everything, mainly due to digital transformation, drive the adoption of cloud service architecture. The control and security of APIs is still mainly focused on a gateway with ID and token-based access management. The API security elephant in the room is data. Data transmitted via APIs in a highly customized layer. On one hand, that customizations give tremendous flexibility to developers. On the other hand, however, conventional security tools relies upon static rules or predetermined patterns just simply cannot keep up, especially when rapid development means constant change and the perimeter is melting away and API adoptions is only increasing. No wonder APIs breaches are becoming more and more common. And the most severe among them are rooted in, for example, shadow APIs that are out to spec or object level manipulations that are evading detection, or simply a token issued to a third party are being abused. What can CloudVector help in API data layer protection? First of all, in CloudVector, our design principle is that any API protection should not slow down dev or DevOps. Therefore, we leverage our years of network security experience to build a variety of lightweight sensors. Imagine them as a lightweight set of network sniffers that are API aware that can proactively inspect all APIs without requiring any agents or code change, or nor adding any gateways or proxies that can slow down your applications. Nor do we rely upon just you giving us the logs. With that proactive API sensing layer, we then build our unique two-phase learning capability. First, we learn and adapt to that custom data layer. Then we leverage that blueprint of the data layer to drive a detection and response engines for advanced API threat detection. With that, we help our customers discover, monitor, and secure all of the API across the API's software development lifecycle in a fully automated and continuous manner. Of course, not all customers would go through that three-step all at once. We have some customers that start with the first step, leveraging the discovery capability to automate the API inventory. We also have a customer who use the data, our monitoring capability to trace the data in transit, especially across API calls. We also have a customer leveraging our runtime monitoring to drive the interactive API security testing to make sure they can detect and prevent API abuse from its being even occurring. For more information, please feel free to contact us. We love to give you a deep dive and adapt.
All right, wonderful. Thank you so much, Lebin. So the next company is very excited to announce that they recently closed their Series A round. Hydrogen's platform allows businesses to configure and embed financial components with a single line of code.
Hi there, Plug and Play. This is Mike, co-founder of Hydrogen. Hydrogen is the Fintech enablement platform. As you probably know, fintech is no longer just a vertical. It's actually a necessity. Our belief is that every company on earth over the next few years will have fintech components that they need to embed inside of their applications. The problem is that it's very complicated to do so. If you look on the left, this is a typical workflow or documentation from a fintech or middleware API, in this case, issuing a card. This is very complex for most companies, whether you're a startup or a sophisticated enterprise, to figure out. What we do is we provide low-code and no-code components and turn the left into the right, drag and drop like Wix or Canva for fintech. Our SaaS is made up of a front office set of APIs and no-code libraries. We plug in on top of all of the major middleware APIs in the market, such as Plaid, Marqeta, Cross-River, and many others. Or if you're an enterprise, you could plug in directly your data to our platform. We layer in on top of this and provide all of the components in a drag and drop interface for you to add fintech very, very quickly. And this goes across many verticals within fintech. So applications within banking, financial wellness, insurtech, investments, etc. You could see some examples here. And our pitch is very simple. We'll get you to market at 80% less time and costs than if you tried to do it on your own. There's two very simple ways to interact with our platform. Number one, if you're more sophisticated and you want a more customized UX and onboarding experience for your users, you could go into our APIs and configure them. We have over 500 different APIs that include data infrastructure, business logic, etc. And then we also have no-code components. If you want something quick that you get to market and configure with less customization available in the UX, we have dozens of no-code components that you could drag in with a few lines of HTML and JavaScript code. I'm going to show you a quick case study here from TD Bank on how they used our platform. This is actually embedded inside of the TD platform in Canada. It's their goals-based savings and investing program. You can see here it allows the user to build a savings plan. These different calculations hit our data infrastructure and our APIs. It actually creates a plan for the customer and then allows them to track the plan over time. So we'll send them alerts hitting our APIs on when they're off track or on track. It gamifies the situation for the end user and they're able to add money and get a better expectant return and savings plan for these millions of users in Canada. So it's a very, very easy way to use our platform to add new products or services for your users. Our business model is very simple. We charge either per user for smaller companies, or we have a yearly fee for larger companies. Very simple SaaS model. Our team is amazing. We're made up of product managers and engineers here in the US and globally, led by myself and my twin brother here, Matt, in the middle. And we have clients not just in the US, but in Canada, in Europe, in Asia, Latin America, etc. We're partnered with some of the biggest companies in the world, such as MasterCard as well. And we've been able to bootstrap the company to this point, and we've been profitable the last few years. We're actually just closed our Series A, which we're excited about, and we'll be doing our Series B within the next year as well. I invite everyone in the audience to start building. These are some examples of different components from left to right. This would be for offering bank products, PFM, portfolio analytics. We have spending analytics and budgeting on the bottom. These are the different things that you could actually build within a few hours in our sandbox. So I invite you all to sign up on our platform and I'll answer any questions. Thank you so much.
All right, wonderful. So I'm guessing everyone saw the polls on the screen. So please make sure to click those if you want an intro to the startups. The next company is going to be Railz, and Railz empowers the SME economy by providing better access to a small business's accounting data. Please welcome Ron.
Hi there, I'm Ron Benegby. I'm one of the co-founders, president, and chief revenue officer at Railz. We're going to be speaking today about accounting data as a service, specifically as related to the small business lending community. This has been an industry that has suffered with many challenges over the years with respect to the back and forth and how long it takes to process a loan application, data being accurate, and ultimately the cost to service any type of loan application and how expensive it is. So at Railz, what we've done as a company is we've looked at other fintechs who have had a lot of success over the years, not just by innovation through technology, but also through innovation of simplicity. Two such companies, Plaid and what they've done in banking, and Stripe and what they've done in payments, Railz is now doing in accounting data. So that being said, we've developed a simple API that connects to the majority of accounting software systems that a small business owner would use day-to-day to run her business. This technology now solves for the inherent problems I've just spoken about. And out of this extraction capability, we offer 3 core services. And at Railz, it's really as simple as 1, 2, 3. The first is what we call our traditional standard extraction service, where on demand, you have real-time access to accounting information directly out of your customer's QuickBooks account with consent provided. You can pull as much or as often as you like. You can pull as much data and as little data as you like. There are really no minimums or maximums, and it's very, very accurate. But like I said, it's a fairly standardized process, one of which there are numerous ETL connectors out there in the market offering. Where Railz separates itself from the pack, not just in North America, but globally, to our knowledge, is in how we present service 2 and 3. So service 2, simply stated, all of these different accounting systems were built by themselves, for themselves, to sell to their own customers. So inherently, it makes sense that if you pull data out of one, it looks completely different than when you pull it out of another. What our technology does is it goes into a data source, looks at how the charts of accounts have been mapped internally within that data source, and then runs a parallel exercise amongst all data sources we're connected to. Why? The final delivery is not just a standardized, but it's a normalized and cleansed data set we provide back to our customers. So regardless of where the information came from, it's always consistent. It looks, feels, behaves the same. This is a level of granularity that no other company currently provides, and we'd be happy to explain further and in due course. And third, building off of this is what we call our analytics engine that tracks over 100 different accounting financial ratios, as well as our own proprietary scoring algorithms tied to credit, risk, fraud, valuation metrics, and methodologies. We're not a decisioning engine, but this is a rich and robust data set that can allow you to make better decisions with respect to your day-to-day business. So if you look at extraction as 1, accounting normalization as 2, and analytics as 3, our API brings this all together, and you as our customer can be up and running with us in less than a day. It's a very developer-friendly technology, and it's a simple implementation with Railz. Our pricing structure is also on that same mindset. It's simple as well. We charge a monthly subscription fee for every account that's connected. Again, everything about our business is simple. How we got here, myself and my co-founders, Derek and Sohaib, we put Railz together fairly quickly. But the unique thing about it is we acquired a technology that had been in market for over 2 years, powering a number of programs, a technology that was already tried, true, and tested. So that's why on day 1, we were able to get to market with incredible traction from a client side, from a pipeline side, and also from an investor side. And we have some of the best investors on the planet. These are global investors who are behind us and have been helping us accelerate our day-to-day business. So when you think of Railz, I want you to think of Railz as Plaid for accounting data. I would be happy to connect with any of you at any time and discuss this in greater detail. Thanks, and that's Railz.
Perfect. Thank you so much, Ron. So the next company is going to be OpenLegacy, and OpenLegacy helps you easily create digital services digital services without being held back by your legacy systems. Prepare to thrive in the digital age. Rami, please take it away.
Hi, Romy Stein, CEO and co-founder of OpenLegacy. Thank you for joining in. A few words about OpenLegacy. As you can see, we started back in 2013 in Israel. That's still our R&D center. And we've been expanding and growing globally over the past several years in every major region. And of course, in North America, New York, and the West Coast. Looking into some of our clients, as you can see, we do have many clients now running in production. A lot of them are Global 2000, Fortune 500 running in production. And we do have a vast array of business partners, ISVs and system integrators that are, we're helping them essentially bridge their solutions into core legacy systems to enable digital transformation in a secure and fast manner. Let's talk a little bit about kind of the challenge that we see in the market. And I think also in COVID-19, many enterprises were surprised to find out that still the majority of their business transactions and data resides on what they call legacy system or on-prem monolithic applications. And as you want to try and move those to the cloud and build digital applications and do it today, obviously you need a strong integration and a timely manner integration that helps you bring those services online, etc. And that's probably the #1 challenge we see in the market. And let's talk a little bit about why is that? Why still today companies are struggling with bringing the digital transformation or digital services for their existing legacy systems, for their existing business processes. So for those who are familiar with service-oriented architecture or SOA, that has been probably the traditional architecture approach when it gets to infrastructure over the past decade or two, you would actually have to go through multiple layers of people and teams and products to build, in the end of the day, a digital process or digitize a process, let's say, get client details or open an account. And a lot of those business processes, when you need to move them to digital or extend them to digital, require those multiple steps, multiple people. And typically, no wonder it takes 6 months for a single business transaction to get digitized. And that's exactly where we can help, because essentially we have coined a new approach. We call it digital-driven integration. And that allows us to bypass all the existing middleware and heavy investment in people and teams that were made. And now those same teams can actually now work much more faster or in an agile manner and actually work with the legacy assets themselves in a digital manner. So we would bypass a lot of those processes and products that are were put in place and access securely those underlying business processes and instantly encapsulate and bring them into the digital world and essentially make them as new digital assets, if you will, that could be consumed regardless of what legacy you have and without the need for new digital people to worry about I would say their backends and their core systems. They can now work in an agnostic manner. In a nutshell, I would say that on average, we help accelerate 10x the creation of those digital services for enterprise clients that have those systems. And we do see improvement in customer experience in terms of the digital experience of those services and reduce time and cost associated with those transformations. So thank you very much and appreciate to have any questions following the call. Thank you.
Great. Thank you so much, Rami. The next company is going to be Hypatos, and they're a deep learning tech that automates document-based back office processes like loan underwriting, claims processing, and more. They joined the program with $12 million in fundraise, and they've been putting that funding to work. They've been adding Fortune 500 clients in the US and in Europe, left and right. Please welcome Jem.
Hi, I'm Jem. I'm the Chief Commercial Officer at Hypatos. We serve global leaders in manufacturing, retail, real estate, and more than 300 software companies that white label our technology. We automate document processing for enterprises. Companies have low automation rates for documents transmitted as images, which leads to expensive operations and costly mistakes. For example, in accounts payable, 4% of payments are due to avoidable mistakes, like duplicate or fraudulent documents, missing out on early payment discounts, and not noticing price hikes on line item level. This also leads to dissatisfaction for all suppliers and customers. Document processing takes place in invoice processing, travel and expense management, loan, especially mortgage underwriting, and insurance claims handling. Our solution automates these processes with a high accuracy, deep learning-based solution that is specific to that domain's workflows, is in production with global leaders, and can be implemented within weeks on cloud or on-premise with no upfront fees. So, how does our solution work? First, documents need to be understood. This is an old problem for us. We are a tech spin-out from an accounting services firm. We have the largest training dataset with more than 10 million manually annotated entities. This is the result of 5 years of effort. We use deep learning ever since it started being used for documents. We use the latest technology. For word understanding, we rely on word embedding to identify relations between words, similar to Google Translate's approach for understanding text. Getting data is good, but processing it automatically is a lot more interesting. We identify duplicates, validate documents with internal and external rules, enrich them with machine learning. For example, we use machine learning to auto-generate general ledger records. We do this at higher than human accuracy, 80% of the time, which saved the European media company almost €1 million per year. Let's see this at work. I'll upload an English invoice from a garage. This is a sanitized example. You can try the service with your own documents by going to our website, filling out the contact form. You will be accessing a similar page. Our models can be run on public, private cloud, or on-prem to satisfy client data security goals and IT preferences. We have converted this document into structured data, which includes sender information, identities in the document, relevant line items that include specific service performed on the car, which can be checked against the insurance policy of the customer. We were looking at an API service until now. The user interface was just for demoing. In cases where model confidence is low, all of these information can be modified in an easy-to-use interface by operators who can easily manipulate the results, either by individual edits, or by assigning different data entities, or by selectively assigning data entities. And this also works with table extraction as well. I have worked for about a decade at McKinsey. I've seen plenty of enterprise automation projects and tools, and we are the highest ROI automation initiative I've ever seen. Contact us to automate document processing in a secure way to unlock savings and improve compliance. We will also start fundraising early next year. Happy to discuss the details. Thank you for your time.
Wonderful. Thank you so much, Jem. So as many of you know, Plug and Play is the largest global innovation platform, and none of this success would be possible without the industry players that shape this ecosystem. We have asked some of these key players like global VCs, colleagues from our global offices, and startups to share some insights with us. So first off, a big thank you to our fintech leaders from around the world for sharing the key ingredients to drive corporate innovation.
Hi, this is Andrea from Plug and Play Brazil. I consider that involving business units since the very beginning of the process is critical to increase the success rate of startup relationships and to drive innovation within a company. Why? Well, it helps our partners to find the right solutions to their challenges. It drives to a higher engagement of the company towards digital transformation. It boosts cultural change, and finally, it allows other business units to be interested in developing projects with startups.
Hi there, My name is Fernando Zornig. I'm overseeing our fintech activities here in Europe. It's a pleasure to be here with you today. There are multiple factors that influence successful corporate innovation. Nevertheless, if I had to choose the most critical one, it would be executive buy-in. It's of utmost importance. Money might not be the main attractor and success factor when it comes to corporate innovation. Really, success requires commitment, engagement, and C-level attention at the highest level. It increases satisfaction within teams working on innovation initiatives and boosts an innovative culture within the organization. And also, there is another side effect which helps projects that are currently on hold to cross that finish line. Thank you so much. Looking forward to seeing you soon. I hope everyone is safe and well. Bye-bye.
Hi, everybody. My name is Jackie, and I'm leading the program management of our fintech vertical in China. After 3 years, we're running fintech program in here. We have seen that the complete professional team leading by corporate administration level is one of the most important components for financial institutions to drive our innovation process. It helps lifting the efficiency of communication for plug-and-play team and our partners, and also establish strong collaboration relationship between innovation team and the business unit. Makes it easier to get budget approval for POCs and ultimately commercialization. It is a pleasure to represent my team to sharing some insight opinion, and I would like to thank all of you in Silicon Valley for future me in and wish you all a successful Expo Day.
Hi, I'm Yuki, here Plug and Play, Japan. The key point, corporates need to see startups as business partners, not the business providers. Why? Some people still think that large corporate is here and startups are here, and this mentality needs to be updated. Corporates shouldn't be looking down on startups. You'll never be able to gain trust from the startups and cannot work with them sustainably with such a mindset. Thank you.
My name is Gabriela Nzerillo. I'm the Director of Fintech for the EMEA region for Plug and Play, overseeing our teams in Amsterdam, where we work with ING, Barcelona, where we work with Caixa, and Paris, where we work with BNP Paribas. In addition, I also support our offices in Frankfurt and Abu Dhabi. When we think about the way startups should be integrated within large corporations, we're often going to think about processes. But fundamentally, one of the things that we've seen working with numerous corporates, numerous large financial institutions across the EMEA region, so not just, let's say, in France or in Amsterdam, in Barcelona, but across multiple different countries, is the fact that the most important factor is company culture. It's only if you have a thriving and open company culture that those processes that allow startups to be integrated within banks and within financial institutions and large corporates in general are actually able to integrate and are actually able to work with the teams internally. Company culture is so important that we found that as soon as there is, let's say, negativity or a lack of open-mindedness to the process of having external solutions come into the internal, let's say, behemoth that are incumbent corporates and incumbent financial institutions, there is no point. Fundamentally, all the processes you may have put in place will fall down. Whereas we've seen large corporates and a number of our corporate champions that have had next to nothing and have built everything from scratch simply because they've been motivated to do it, because they've had teams who supported them, and because they've had, let's say, top-down sponsorship from executive leadership, giving them that power to go forth and create with startups.
Hello everyone, my name is Nadine and I'm leading partner success for our fintech vertical here in Silicon Valley. Around the world, we are working with more than 70 of the largest and most forward-thinking financial institutions. And if you are interested in learning more about some of the best practices, please reach out to us. We would be delighted to set up a one-on-one session with you. My email is nadine@pnptc.com. Thank you.
All right, wonderful. I hope you enjoyed that little trip across the globe, and thank you to all our global fintech teams. So the next company combines RPA with AI to form an end-to-end intelligence process automation platform that automates repetitive and time-consuming tasks for knowledge workers. Welcome, Automation Hero.
Hey there, my name is Freddie and I'm Head of Strategic Partnerships at Automation Hero. Thank you so much for giving us the opportunity to present to you today. Automation Hero has built the first true end-to-end intelligent process automation platform for the enterprise. The future is autonomous, and we see this already in the market with autonomous manufacturing, autonomous warehousing, autonomous vehicles, autonomous driving. And what's next? Well, it's autonomous business processes. And in traditional industries, such as the financial industry, Gartner and many large other research firms are stating that by 2030, 80% of heritage financial firms will go out of business because the competition is outrunning them very, very quickly. Now, how can we solve this problem? And in the automation space for the last couple of years, there has been one major technology really gaining a lot of market share, and that is RPA, or robotic process automation. RPA is hitting a wall, and that is due to a couple of factors. Traditionally, RPA is really just about plugging structured data into legacy systems. With that problem being solved, more complex problems are showing up and more complex processes need to be automated. And for that, you need to involve unstructured data that then needs to be transferred into structured data to then be automated. This is what you need true AI and true artificial intelligence, deep learning skills for. Now, the biggest RPA vendors in the market don't have AI capabilities and leverage third-party vendors to do so. And on the other hand, Automation Hero has built in true deep learning capabilities that we can stretch from dark data extraction to intent detection to intelligent OCR to sales prediction models, all sorts of AI models that the customer needs. And secondly, we see that traditional RPA is usually a combination of a lot of different tools. They're really trying to stitch together a lot of technologies such as big data analytics, such as process mining, as aforementioned AI, and really just kind of integrate them together, which usually costs the customer a lot of time and a lot of money because integration issues are usually very big ones and they're not easily solved. Gartner has come out with a big prediction for 2020. That prediction was of hyper automation, and Gartner in fact had stated that Automation Hero has built the first hyper automation platform before hyper-automation actually became a thing. Automation Hero's approach to end-to-end automation is the one of a continuous agile development. We consider 5 mandatory factors that we pull into our automations. This is number 1, humans. This is number 2, documents, large bodies of text, or really all sorts of unstructured data. Number 3, workflow. Number 4, big data scale integrations. And of course, number 5, insights or process mining. Now let's look at some of the example use cases that we see in the financial services space. One of the use case categories is generally around any sort of email triaging. And for that, you need intent detection models. For example, you receive emails through a corporate email account that either have attachments or not. And then initially in the first step, you just use an intent detection model to classify those emails, triaging, and then bring them to the specific department that usually deals with a specific problem. And this could be a customer complaint, what's the current balance on their statement, etc., etc. These emails could have attachments, which we then would use a second AI model for to just use intelligent OCR to extract data from these documents and then pull all these information together and either update a CRM or update a claim system or really update any other type of legacy IT system that the financial institution is currently using. And overall, you see that the response time to these individual requests from a customer, in this case, for example, but it could also be company internal, really reduces very quickly from days to minutes. You have a very high degree of customer satisfaction because everything is executed much, much, much faster. You definitely see a reduced reduce the workload for agents up to 80% in certain examples, and so on. And then the second use case category is a much simpler one. For example, in this case, it's a payment authorization where you receive a whole bunch of documents with a customer number, an IBAN number, an account number. This information needs to be extracted and then needs to be put into an SAP Finance or into any other legacy IT system or database system that the customer has deployed. Very easy, no more manual work necessary, and can be automated 100% very quickly. And with this, I thank you for your attention, and I'm looking forward to your questions now. Thank you so much.
Wonderful. Thank you so much. The next company we have is going to be Skan AI. Skan is a cognitive engine that leverages computer vision and machine intelligence to help enterprises map, model, and manage business processes. Please welcome.
Hello there, my name is Avinash and I'm the CEO and co-founder of Skan.ai. Skan helps map, model, and manage the invisible enterprise. What is the invisible enterprise? Between what an organization thinks is its business process and what is actually happening on the ground. Between the boxes and arrows diagrams at level 1, level 2 that describe processes and the standard operating procedures and what's actually happening in the innumerable exceptions, nuances, and decisions that human beings are taking with digital tooling lies the invisible enterprise. It is critical that we know that, but the reason we do not know about it is because we use human discovery to be able to figure out these business processes. This act of human interviews actually does not work. It does not work because there is a tacit dimension of knowledge, that human beings know more than they can tell. And always, when we ask someone what is it that they do in a given situation, the answer is not what they do, but the answer is what they're supposed to be doing. And so, large part of what an organization thinks is its business process is simply not true. You'd say, well, that's all very well, but why do we care? We care because we do not want to be a statistic on a page like this. Enough blood, sweat, and tears have already been spent on digital transformation that was not quantified and depended on anecdotal evidence. Skan aims to change that. We change it by using computer vision, which is where the digital rubber hits the digital road, which is where all decisions are seen on the screen. We use computer vision to observe the screens at scale across the organization to be able to figure out what the business process is. We do not require access to your backend systems. We do not require access to any data or logs. We use information on the screen, and using computer vision, we figure out what the business process looks like. There is no human discovery, and therefore we can easily go beyond the happy path descriptions of work. And because this is a data-driven description of work, we can simulate, we can interrogate, we can automate these processes. So Skan, we deploy tooling on each of the desktops where work is happening, and we use the information on the screen to capture information much like a WebEx or a Zoom would, and use that to be able to build out process twins, not just on the work of one person, but of the many people who are working in the organization. Using this information, we are either able to provide supervisory AI or data-driven re-engineering and transformation that then dovetails into digital transformation agendas of the organizations. So what is it that Skan can do for the enterprise? One, it can help understand and optimize before you make digital interventions based on data. And second, after the digital intervention has been made, and that intervention may be automation or change in tooling or retraining of people, monitor and manage the impact, again, on a data-driven basis, not based on interviews. So Skan does not automate. Skan drives continuous compliance and risk using supervisory AI. Skan benchmarks work, provides precision training, and Skan is being used for process mapping and compliance in claims management, in automation and application rationalization, in compliance and due diligence, and in optimization and transformation at large organizations. Feel free to reach out to us at www.skan.ai. Thank you.
Thank you so much, Avinash. The next company we have is going to be Dasha AI. And Dasha is the first and only AI platform that allows you to design, test, and launch rich human-level voice conversations. They're recently recognized by Gartner as a 2020 Cool Vendor in Conversational AI Platforms. Vladislav, please take it away.
Hello, my name is Vlad. I'm co-founder and CEO of Dasha, and Dasha is the only voice conversational AI platform for developers. And developers use Dasha to do different tasks. For instance, automate repetitive voice and text conversations, free agents up for more valuable work, reduce operational overhead costs, and provide a better quality of customer service. And actually, the possibilities are endless. And developers choose Dasha because it's the only voice AI platform for developers in the market. 100% proprietary tech with 98% correct conversations. Zero cost to start building because we have a pay-as-you-go business model. We have 50 engineers, 2 PhDs, and 6 PhD students. And most recently, Dasha was recognized by Gartner as a 2020 cool vendor in conversational AI platforms. So the potential use cases are, for instance, a self-service, a customer support, tier 1 or tier 2, with both like voice and text, NPS, CSI surveys, renewals, and upsells. So the fintech use cases are debt collection, the transfer money, and verification. The insurtech use cases are claims management, renewals, scheduling appointments. The healthcare use cases are triage, appointment management. A brand and retail use cases could be purchase and payments, refunds, cancellations, cart abandonment. Supply chain and logistics use cases could be a delivery management, logistics, and delivery confirmation. And travel and hospitality use cases are concierge bookings, refunds, cancellations, flight status, late checkout, room service, and many more. And energy and sustainability use cases are outage reporting, claims management, service requests, dispatching, and billing collection. So let's listen for a quick demo.
Hello. Hi, my name is Daria with May I ask for a minute of your time to share your experience at our clinic?
Sure.
On a scale of 1 to 5, how satisfied were you with a visit to our clinic?
4.
Thank you. Is there an area where you see we can improve?
So the case study, first case study is increasing sales. So the large European bank, they had a loan application form on their website, and they were driving a lot of traffic to this loan application form. So before Dasha, the conversion rate was 33%, and the callback time was up to 3 days. So after they implemented this business process on top of Dasha, the conversion rate went up like twice as much to 67%. And the callback time dropped like under 10 minutes. And as of now, actually, Dasha does like processes like 600,000 leads per month on behalf of this customer. So the next case study is cost reduction. European National Postal Service, like before Dasha, they have problems with the call centers. They are expensive and unreliable and unscalable. Couriers spend a lot of time on delivery options. And there is no way to optimize storage space and logistics. And so they implemented this business process where Dasha was actually confirming delivery options with the recipient. And the whole call center cost reduction was by 40%, which is huge. And the courier productivity had increased by 8%. And more than 91% of previously undelivered parcels has been delivered. So in terms of the fundraising, last year we raised $2 million seed round from RTP Ventures. Those are investors in Datadog. And we're looking towards rising our Series A next year. So you can sign up for beta here at dasha.ai/developers. And thank you for your attention.
Great. Thank you so much, Vlad. The next company is going to be ElectroNeek. And ElectroNeek is a hyper automation platform with ML-powered products to automate 90% of operations with documents, voice, and business apps.
Hi, everyone. I'm Dmitry Karpov, co-founder and CIO of ElectroNeek Robotics, a creator of free robotic process automation. So let's dive into our short deck. So we are in the business of RPA, and I assume that a lot of you know what RPA is. If you not, you better Google it right now. So another RPA company, you're thinking, what the heck? How do they differentiate? There's so many of them. What's so special about this particular one? And how it made it to plug and play? Let me explain. When we open the door of our clients, we ask a simple question. Have you considered automating something with RPA tools, but decided not to do that? Okay, if so, why? And it happened that overall human development and technology cost of the processing of the automation pretty much kills the ROI. And we, and my co-founders, when we see that working with the largest banks, with different RPA vendors, kind of figured it out that if we create a tool that would be suitable for massive attended automation of decentralized processes, of ad hoc things, of minor IT processes that accompany digital transformation, we can really get to a scale, and it's something that companies need. So we specialize in automation with a lot of smaller tasks. On this slide, this black bubble is pretty much what's already automated in major enterprises. Accounts payable, invoice reconciliation, all of these centralized processes. Bigger green bubble, that's what's left behind. We would be happy to jump into that together. That's our product. It's ElectroNeek Studio, the only one RPA tool in the world that is completely unbundled from the bots it produces. So anyone can go there, minimum IT requirements, create a bot. Once the bot is created, it's compiled, it's executable file, can be run in any environment, on any computer in the world, completely for free. That's our big vision, to make the digital workforce of RPA free. So we charge only for access to developer account, and we charge so little that makes all these processes affordable to automate, so we make money at scale. So for 400 months, you get access to a developer account that could be shared in the organization. And again, anyone who created bots there can share them freely with the whole world. They could be run on any computer for free. So that model is very well known in IT, called integrated development environment, where a creator pays for a tool to create things that is their intellectual property. They can run it freely in any environment. So there is zero marginal cost for deploying an additional bot. That is getting momentum. So we have been named the top aspirant by Everest. And for those of you who track RPA industry, that's very important. Capterra and Gartner's Capterra gave us best ease of use award recently because of our UX. Forrester just put us in the article 7 innovations that are the most critical for RPA market. But these are agencies. Look at our client portfolio. These are largest global companies that already created free digital workforce using our tool. We have been founded really less than 2 years ago. Our company has 150 clients across the whole world, starting from North America and going down to Australia and New Zealand. We work, majority of our clients would be in banking and insurance, in accounting. That's actually our fastest growing client base, and manufacturing. We work with other industries and honestly tend to think about us as industry agnostic vendor, but banks and insurance companies, they probably have the highest share of these decentralized processes that require automation. We have strong business partnership with Sage, leading vendor of accounting software. We explore the cases together and work with their clients. We prefer vendor for them. We work with Microsoft, so we can provide Azure infrastructure to someone who wants NVIDIA on Voice AI and Oracle. Our largest implementation partners are Big Four and Accenture. We raised 3.6 million last year and going to raise again in 21. Stay tuned. Thank you.
All right, thank you so much, Dimitri. The next company we have is going to be RMI Insights, and RMI automates three-statement financial modeling by allowing their clients to ingest financials as is and project how their company will perform in the future.
Good morning, everyone. My name is Varun Balan, and I'm the co-founder and CEO of RMI Insights. We built RMI Insights to automate financial modeling. The problem. So building a company's operating model is time-consuming and difficult. The status quo, Microsoft Excel, can take days to complete, is tedious and prone to errors, and can be poorly built depending on the author. Unfortunately, over 85% of financial models built have errors. My co-founder and I know these problems firsthand as we experienced them as investment banking analysts at JP Morgan almost 10 years ago. We spent a lot of late nights toiling over manual data entry of historical info, formula errors, and a lot of issues around version control. These long nights and problems are where we began noodling on a better way for financial modeling to be done. Since JP Morgan, I focused my career on building financial and accounting technology automation solutions for SMBs. Sylvester, my co-founder, has built a remarkable career in private equity and private credit, most recently as a principal at a large private credit fund. We're the right team to automate financial modeling. Our solution. Our solution, the RMI Insights platform, empowers anyone to build a financial model in seconds to be used for FP&A, competitive benchmarking, and a host of other applications. Our platform accomplishes this by applying machine learning in a simple two-step process, which entails uploading and adjusting historical financials. Our current customers have been able to build financial models 10 times faster than normal using our technology, and they've been able to eliminate all formula errors. This simple and intuitive framework enables a lot of efficiencies which aren't available in Microsoft Excel. Namely, we can generate projections instantly, avoid manual complex formulas, eliminate version control issues, and make it easier to vet or review a model. One of the key applications of our software is leveraging our patent-pending machine learning algorithms to standardize financial metrics and ratios for any time period for any company, whether it's public or private. This provides our users with an instant pulse, not only on their own company's financial health, but understanding how their company is faring relative to others in their industry and even industry bellwethers. The opportunity. So we're in a large and growing market with over $10 billion spent annually on financial accounting software by SMBs in the US, and this is growing 20% over the next decade. In the competitive landscape, our competitors are focused on integrating with different ERP sales and marketing systems. Two of our closest competitors recently raised $5 million. However, we're the only competitor in our space to apply machine learning to three-statement financial modeling to drive FP&A outcomes. However, FP&A is only one application of our product and not its sole use case. This is the case for our competitors. Our traction in the future. We started building the product in late 2019. A partner at Motley Fool Ventures invested $200,000 in us then to help convert our initial rules-based MVP into a functional machine learning-based product. Since then, we've acquired many beta customers and several paying customers. We have a $12,000 annual contract value and are adding a new SMB customer roughly every 2 weeks. Excuse me. In September of this year, we were actually accepted into this accelerator, which has led us to have meetings with a lot of you in the audience who are interested in piloting our product for enterprise use cases, namely to either A, automate commercial credit underwriting, or B, automate monthly and quarterly asset management reporting. So since the program began, we've had a lot of traction with SMBs, and we're looking to raise our pre-seed round to continue our growth. We plan to use the capital primarily to engage in a proof of concept with a large financial institution, but also really to continue the strong trend we've seen over the past few months. We're going to hopefully hit $120,000 in ARR by March. And with capital, we're very confident that we can acquire 50 paying customers by June, establish product market fit with the large institution, hopefully by one of you in the crowd working with us by September. And then we plan to raise our next round in about a year after we've hit 80K in MRR. Thank you all for your time. Please feel free to reach out to me if you're interested in working with us. I hope to hear from you, and thank you for your time again.
Thank you so much, Varun. The next company that's going to present is TriggerMesh. TriggerMesh provides a real-time cloud-native integration platform that allows you to connect services together, automate workflows, and accelerate the flow of information across your organization.
Hello, I'm Mark Hinkle, CEO and co-founder of TriggerMesh. Thanks for taking the time to review our technology. We are building a cloud-native integration platform that integrates, automates, and accelerates applications to move at cloud speed. We see the future of application as being the integration of cloud services, SaaS providers, and on-premises applications that are connected in real time to create automated mashups of the best-of-breed cloud-native architectures while leveraging your existing investment in your legacy infrastructure. To better explain our solution, we've created this short video of how our technology works.
The TriggerMesh cloud-native integration platform enables portable and replicable event-driven workflows for hybrid cloud and legacy applications. With TriggerMesh, enterprises can connect all their cloud and legacy applications in a single platform. Every change in a system is an event, paying for a trip, updating an expense report, or changing a price record. Organizations must take action in real time. To become real time, they must become event-driven. Serverless computing enables event-driven architectures by abstracting the infrastructure so developers can focus on writing the application code. Developers of cloud-native applications were first to benefit from serverless and event-driven architectures. We can think of these greenfield cloud-native applications as similar to building a new house. But most developers work on established monolithic applications. For us, the situation is more like renovating an older home. To bring event-driven architecture to these legacy applications, enterprise developers need to gradually replace monolithic services with cloud-native services. This can be hard enough on its own, and it's even harder if you want to use more than one cloud to avoid lock-in and access all the innovation in the ecosystem. To bring event-driven architectures to hybrid cloud and legacy apps, developers have to use different mechanisms for triggering events on each cloud. This brings cost and complexity, slows you down, and increases security and downtime risks. What's needed is a consistent way to bring event-driven workflows to every infrastructure and every cloud. TriggerMesh EveryBridge harmonizes serverless workflows across every cloud and on-premises application. EveryBridge event sources, brokers, and targets are natively multi-cloud. With EveryBridge, every event source and every service are first-class citizens. TriggerMesh frees you from cloud silos and the constraints of legacy apps to unleash all the power of event-driven architecture. For example, with EveryBridge, you can get event notifications when a file is added to an S3 bucket, and then trigger image analysis using the Google Vision API, or get events from a local Oracle database and use AWS SNS to send emails. TriggerMesh puts you in the driver's seat. With EveryBridge, you can codify event sources. EveryBridge harmonizes all your event sources for all your developers, encouraging reuse, speeding development time, and reducing complexity. Increase cloud portability. EveryBridge makes events from any event source available to serverless functions on any cloud or on-premises. Accelerate delivery with source control integration. Push functions directly from your preferred source control host like GitHub, GitLab, and Bitbucket. Ready to see how far you can go with serverless? Try TriggerMesh for free. Go to cloud.triggermesh.io today.
All right, thank you. So next up, we have another one of our spotlight videos to switch it up a little bit. And for the second video, we asked our VCs to share the hottest trends for 2021.
Hi everyone, my name is Adriana Saman. I'm an investor at Clock Tower Ventures. I've done Plug and Play basically since I joined Venture. Eugenio, who leads Fintech and InsurTech at the team, has been one of my closest friends and one of the people that I collaborate most closely on deal flow and diligence. In 2021, in Fintech, I think embedded lending will be massive. We're already starting to see it arise at the seed stage with multiple startups trying to find ways to collaborate and gather all the information from payment companies to enhance their ability to lend money to merchants. The reason why I think this is going to be massive is because we're seeing a credit crunch in COVID times where small merchants and really all players in the economy need more cash liquidity, in addition to a further digitization of digital payments, which allows us to have much more flow of information on the cash flow of companies to underwrite more easily.
My name is Max Nazarov. I work at Fireside Ventures, a fintech focused fund. We've been investing in financial services companies for 8 years, and we've been working with Plug and Play for 3 years out of those 8. One of the trends we see playing out more prominently in 2021 is embedded finance. It's a trend where companies and consumers will be able to consume financial services without leaving software products. I think it will be applicable to both B2B world and B2C world. I think it will be a little bit more prominent in B2B world, where business payments transactions will be able to be completed without leaving software products. To that end, I think there will be, and there are already, a handful of infrastructure players that will be powering this trend of embedded finance, and they will be helping companies, software solutions that already own business clients and consumer clients to complete those transactions without leaving software. So that's what we're looking at. One place where we're starting is payments, but I think it's applicable to our services such as savings and lending as well. Thank you.
Hey everyone, I'm Ryan Gilbert, Managing Partner with Propel Venture Partners in San Francisco. Great to be back at Plug and Play, and I look forward to seeing you all one day back at the Plug and Play Center. It will be great to get together again. The past year has caused us all to rethink and redefine what we're doing in fintech and financial services. And I think one of the biggest trends we're going to be following in 2020 is to understand how to better manage and reduce the cost of customer acquisition. We all talk about CAC and try and understand what the CAC to LTV ratios are. But we recognize that during the pandemic, the way we've acquired and retained customers has certainly changed. Many of us are spending far more than we should be on customer acquisition. I'd like to invest in technologies and systems and processes to reduce our cost of acquisition so that our companies can scale more rapidly and be profitable a lot faster than ever before. Great seeing you. Thank you.
Okay, I hope that gave you all a good look into the next year and the next trends. We sure all hope we'll be back in the office and seeing everyone in person soon. So the next company that we'll be presenting is Inpher, and they have some exciting news to share. They recently started working with Philips and leading European hospitals to accelerate innovation with personalized medicine and patient care with privacy-preserving AI. They're pioneering cryptographic secret computing, and their engine is now available on AWS and GCP marketplaces.
We are in the age of machine learning and AI, and we have an insatiable appetite for data, but we're facing headwinds. Consumers, policymakers, and regulators are justifiably voicing their concerns about the use of data and privacy. And this is leading to balkanization, data silos. Now our data lakes are becoming data ponds. Sometimes our data lacks the diversity, which leads to algorithmic bias. And there's sovereign data policies, which are inhibiting our ability to transfer personal data across borders. We need a way to compliantly, securely, and privately compute on that distributed data without moving it. I'm Jordan Brandt, the co-founder and CEO of Inpher, and we pioneered secret computing to solve this problem. We're enabling our customers to compute data while it remains encrypted, to enable privacy-preserving machine learning and analytics. We're here to dispel this false dichotomy that you have to make a trade-off between data utility and data privacy. You can have them both. So a quick synopsis on encryption. There are 3 primary pillars of encryption. You have encryption in transit, encryption at rest, which I hope all of your organizations are doing today. At Inpher, we're focused on the more elusive target on encryption in use while it's being processed. This is what we call secret computing. But now this isn't only about data security and privacy. It's about what you can do with your data because it is secure and private. We're just scratching the surface on the applications and financial services with our customers today. Within your organization, we can enable you to compliantly run analytics across jurisdictions, across lines of business. We're seeing banks partner with telcos and insurers to build better credit models, to build better risk models and customer marketing applications. And we're really excited about the evolution of consortia to fight fraud and AML with enthusiastic support from the regulators. The basic simple definition here is more data equals better predictions, right? Within your organization, within a department, within a line of business, you may not have the diversity of data that you need, again, leading to algorithmic bias or suboptimal performance. By combining more data, you're able to get better predictions with simpler models that you can explain to regulators. And as we see more cross-industry sharing, we're starting to see more predictions that were impossible to make before secret computing. To explain this a little bit, our XOR secret computing engine is in production today with customers around the world. And let's walk through a scenario. Let's say that you have a data scientist who wants to be able to train a model on distributed data to which he or she does not have read access. It's very simple. They're going to use their current tools and develop their model in, let's say, Python. They're going to submit that to our XOR service, which will compile it into a secret compute circuit, which is sent to these distributed data sources. That data is then computed while it's encrypted and exchanged between these parties, respecting all of these sovereign data silos so that you can meet compliance requirements like GDPR. Those results are then broadcast back to the analyst platform where they're combined into the final output, which is accurate to within 6 digits of precision. So to recap here, the data scientist was never exposed to PII in those data sets, the XOR service never saw the data, and all those data silos remained intact. Now, when you compare this to other privacy-enhancing techniques, secret computing is the only one that does not trade off between privacy and precision. Our commercial product, XOR, is based on our advances in multi-party computation. We also have an open source library for fully homomorphic encryption called TFHE. And by the way, both of them are quantum resilient. Inpher is headquartered right here in New York City. We also have offices in Switzerland and San Francisco. We have an experienced leadership team that's built successful companies before, and we have a very deep and diverse technical team. We publish over 300 papers in cryptography, mathematics, and computer science. But it's not only our team there, it's also our customers and our investors who believe in the company, believe in the technology, and are using it today. So in summary, we're building a secret computing ecosystem with industry leaders around the world. We're deployed live in many locations, many countries. We're starting to see more cross-jurisdictional applications. Today, we're helping our customers improve the current models that they have and do so compliantly. Tomorrow, we're enabling our customers to make predictions that are impossible to do without secret computing. Remember, in the age of AI, you do not have to trade off your data privacy and the utility. Thank you very much. Give us a shout later.
All right, don't forget to answer the polls, everyone. Thank you for your engagement. The next company is Okera, and they solve one of the biggest challenges with hybrid multi-cloud and multi-vendor data platforms, opening data access for innovation while ensuring proper data security, governance, and compliance.
Hello, this is our Paul Sink, the head of marketing for Okera. A company that is working in the secure data access space. So we'll talk a little bit about the company overview, give you some customer case studies, talk about our differentiation, and hopefully the question and answer will be when we actually do the session. So company overview, the market segment that we are after, the data obviously is growing really fast, but the data access is growing faster than the data itself. And more people are thinking about using multiple clouds. Then there is the regulations such as GDPR, CCPA, and others, where a lot of fines have been imposed. and what you get from your cloud supplier is generally inadequate. So these are the reasons that sort of the problem in the market. But if you look at it from the user point of view, there are data consumers who really want access to their data very, very quickly, whether they are data analysts, data scientists. And then when you look at the team on the other side, which is the data platform leaders and responsible for governance steward, they're kind of struggling because they just can't meet the needs of these people fast enough. So if you can't get access to data fast enough, you really can't innovate. And so there exists a gap. The gap in data access, multiple copies of data set everywhere, can't offer granular controls, lack of audit, regulatory risks. And those are the gaps that say that, hey, there needs to be a different approach to secure data access. And that is the problem we solve today. So our product gives you three things at a very high level. We discover the data for you, categorize what is sensitive, give you out-of-box reports and auditing. Then more importantly, help you create and manage policies, which are not centralized, they can be distributed. And then on top of that, we give you the whole protection, whether you want to control the access by row, by column, by cell. If you want to mask a credit card number for somebody else to see it, we'll do that all automatically by a simple point and click and make it really easy for you to do that. In terms of the expertise, the company comes with a very large expertise in the big data architecture and security, already have raised money. We have a lot of Fortune 1000 customers as well. In terms of the case studies, just give you a couple of examples. Nike has had our system for over 2 years. Bristol Myers Squibb using drug discovery, using our application. Capital one of the largest banks, using our system to do all the access control globally. In terms of our differentiation, we make it easy to secure without any compromises, whether it is attribute-based access control, whether it is data de-identification, or dynamic enforcement of fine-grained policies. And then we are making sure that we can create a system where the stewardship can be distributed within the organization. And our differentiation is proving a proven enterprise-grade scalability, something which scales as the enterprise needs change. We have right now a 10 petabyte plus data lake working at Nike for a number of years. This is a bottom line, i.e. the problems we solve. And our customers are in financial services, pharma, healthcare, e-commerce, utilities. Some of the sample names are here, and the team knows how to execute. So thank you very much.
Thank you so much. So the next company is going to be Kinetica. And Kinetica is a streaming data warehouse. They're powering data monetization for financial services with an on-demand analytics and ML.
Yeah, hello everybody. Thank you for having us. I am Nicole. I work for Kinetica based out of New York, and I take care of the major accounts in financial services. And today we show you how the Kinetica streaming data warehouse is really helping you monetize your data. And before we go into the topic, let me shortly describe who we are. So our solution, our streaming data warehouse and database was built 11 years ago. And it was built for actually the US military, where they wanted to aggregate 200 different data sources in one single database, and the solutions at this time were not possible to handle that. So our founders, Amit and Nima, they actually developed our database, and here we are 11 years later, and a lot of things happened in terms of extreme data now. So I show you how our solution really helps you to move faster than the competition with the data, and helps you to open opportunities. We show you how we blend diverse data sources for an added insight. And we also apply machine learning and AI capabilities to uncover new opportunities. So this is actually what I was talking about. This is our streaming data warehouse. As you can see on the left-hand side, any data you can imagine can come into the Kinetica database which is a GPU accelerated in-memory column database. And you can see that we bring together all kinds of data, streaming data, historical data, location data, and we power it up with machine learning and AI capabilities. And especially now in these times and COVID, we have tons and trillions of new data points coming along every day. And you need all this data to be ingested. So our database can do that. And as a result, you can, of course, aggregate the data and you can use it in every application you might think of. We are a GPU accelerated database, but actually we also use CPUs to really maximize the power of the infrastructure. And when I talk to my banks, active analytics applications that are of interest at the moment. So whenever big data comes into play or extreme data, it is kind of interesting to speed up the performance. Real-time portfolio risk analysis, I think that is clear. As you know, a lot of banks still work with, you can name the Monte Carlo simulation, work with spreadsheets on CPUs. There is really now the time to speed that up. Accelerated transaction cost analysis is another use case. And today we show you the mortgage risk and opportunity analysis, because in the mortgage market, and especially now in the second quarter of COVID, there's a lot going on there. So the mortgage risk and opportunity challenges, where are we now in the second quarter? We are in August and we find flat negative interest rates. They really require on-demand modeling. It is very difficult at the moment to combine your analytical techniques to uncover high-value opportunities in the challenged markets. And you also have that, the increase of the unemployment rate, and you probably have new parameters that has to be taken into account, such as tracking and tracing also COVID cases. And here is what our platform looks like. And again, our streaming data warehouse can do a lot of use cases. This use case is where we really ingest a massive amount of data. We ingest a real-time feed of interest rates. We ingest the Fannie Mae 40 million records. We ingest 1.2 billion performance data points to really uncover hidden opportunities in the mortgage market. And in that example, you see that's Florida, because it is, to uncover these opportunities, you have to see the unemployment rate. You have to see the economic situation, the socio-demographic factors. So a lot of data, and that gives you, because it's an opportunity layer in that installed here as well, where you can really see interesting objects. But that is just one example. And that is a slide that shows you before and after Kinetica. So one of our clients is a major US retailer. He uses us for supply management to really make sure that every day there are fresh strawberries to buy. And what they do is 30 million streaming inventory queries a day. That's massive. A global asset manager works with us, and for regulatory and internal reporting, when the reporting time came from days to minutes. So that's really massive. And finally, what do? We help organizations to uncover new value from their data. So check us out. Thank you for your time today.
Thank you, Nicole. Next company is going to be mparticle, and they're a customer data platform made to help brands collect, unify, and activate upon their first-party data.
Customers interact with your brand in more ways than ever, on mobile, web, in-store, and online. And every interaction produces more and more data. But as a product manager, developer, or marketer, how can you make sense of all this data and act on it to deliver the best customer experience? mparticle. It's a customer data platform that collects granular real-time customer data from every source and sends it to any channel or tool across your stack, from data warehouses to analytics to marketing tools. As customers engage, mparticle collects, cleanses, and unifies user events and attributes into individual persistent profiles, giving you a 360-degree view of customers. You can also build self-maintaining audience segments to track users and forward customer data across your entire stack with one click. mparticle is built for your whole team, including non-technical members, to easily manage transactions and attributes on the most precise level, whether for policy, maintenance, or anything else. With mparticle, your data flows round-trip. You don't need to build and maintain tool integrations, and you can send whatever customer data wherever you need it. mparticle can help you provide your customers with personalized, real-time omni-channel experiences. It's what allows Chick-fil-A's app to use geolocation and push notifications to time orders, and provides Via with the data necessary to minimize rider wait times. And these examples are just the tip of the iceberg. Learn how mparticle can help you maximize the value of your data and exceed customer expectations. Request a demo today.
All right, that was short and sweet. Next up, we asked some of our fintech startups from our alumni and portfolio ecosystem to share their experience working with Plug and Play. Let's see what they said.
Hi, my name is Francois, CEO at OneUp.com. Commercial implementation. Thanks to Plug and Play, we were able to reinvent business banking. First, we connected to BNP Paribas and signed a POC 2 years ago, and we moved to a production phase on all their small business clients. Plug and Play was for us a game changer to be able to reinvent small business banking worldwide.
As a startup, we've had an incredible experience working with Plug and Play. Over the last 3 years, we've built amazing partnerships, networking opportunities, we've had brand exposure globally, and most importantly, Plug and Play is a unique accelerator because they've created so many opportunities for us to meet corporate partners and sponsors who we would otherwise have had difficulty getting access to. Plug and Play has a unique setup where they take the time to understand exactly what your startup does, and most importantly, they source the correct opportunities, networking the startup with the right corporate partner based on the problem that the corporate partner is looking to solve in their current roadmap. Overall, Plug and Play has provided us with a phenomenal experience, and we can't wait to continue furthering our relationship with this program.
Hello, my name is Avinash, and I'm the CEO and co-founder of Skan. Skan uses computer vision to map business processes. But I'm not here to talk about Skan today. I'm here to talk to you about one of our partners, Plug and Play. Our association with Plug and Play is over a year old, and in this 1 year, we have been extremely pleased with the way the relationship has progressed with Plug and Play and the contribution that Plug and Play has made into our business and the growth of our startup. There are 3 things that stand out in my mind when I think of Plug and Play. Number 1 is the fact that I have tremendous access to different kind of experts and resources by way of this association, be it guidance on marketing, on product market fit, on pricing, on simple things like polishing pitch decks and pitching. All of this is made available because PNP brings the best in the industry to engage with the startups. And we have tremendously benefited because of this association. The second, of course, is the Open Innovation Platform, which has corporates on one side and startups on the other. And being part of that platform has not just given us access to the innovation departments at large organizations who've given us pilots, but more importantly is the feedback that comes by associating with these corporates through Plug and Play, and the routing of that feedback back into the product as to what is it that the customers are looking for. And I think that's worth its weight in gold. Finally, I want to state here that we look upon organizations like, let us say, Apple, Southwest Airlines, as beacons and as the top, cream de la cream of customer experience. If I treat myself and the corporate partners as customers of Plug and Play, then Plug and Play, as far as customer experience is concerned, has to be right up there, number 1. The amount of attention to detail, the commitment to making the partner, which is either the startup or the corporate partner, successful is seriously not something to be taken lightly. At Plug and Play, you can almost feel the energy in every single person and a direct commitment to the startup and to the corporate partners. So I treat Plug and Play both as our partner, but also as a shining example of commitment to one's goal and the commitment to customer experience is. So again, I wish Plug and Play the very best, as well as thank them for all the efforts that they've done as part of building this open innovation platform, which is bringing together startups and corporate partners. Again, thank you.
Okay, looks like our team could give ourselves a little pat on the back for that one. Thank you to all of the startups that took the time to help us make these videos. I really appreciate it, and it's been a pleasure working with all of you. So the next company can help your company detect hidden revenue opportunities ahead of your competition. Let's learn a little bit about Aptivio.
Hi, my name is Guy Mounier, CEO of Aptivio, the first augmented intelligence platform built specifically for B2B sales reps. Volatility is the next normal for B2B sales reps, and it has created 3 new expectations for them. The need for compensating losses in mature markets while accelerating sales in new markets. The need for engaging potential opportunities ahead of competition. And finally, the need to build trust and empathy with new clients remotely. Sales teams are building resiliency to the next normal in 3 ways. 1, by securing new clients in international or SMB markets. 2, by securing new offerings and tech-enabled services. 3, by securing a frictionless sales user experience. Aptivio delivers the key building blocks for sales resilience out of the box. First, the 150 external client signals powered by billions of behavioral data points per day that inform your sales team on hidden revenue opportunities. 2, personalized action cards that guide your buyer-centric sales actions throughout the buyer lifecycle. And 3, plugins that assist the sales reps in their existing sales stack, either via real-time coaching or in autopilot mode. Volatility is disrupting your way of selling throughout the buyer lifecycle. How to quickly detect hidden revenue opportunities in a new market while avoiding wasteful pursuits. How to choose from a bigger list of leads when to pursue an opportunity. How to build trust remotely with new and moving stakeholders. And how to quickly react to competitive risks and changes to the status quo. Aptivio delivers 4 always-on buyer-centric powers, enabling your reps to see deeper and wider in a volatile market and sell more. It continuously detects early demand indicators and hidden revenue opportunities. It qualifies leads over time and alerts you of sales-ready opportunities. It constantly maps key influencers and warm intros from your strategic network. And it systematically monitors for competitive threats and status quo changes to help secure deals. We have strong use cases and performance benchmarks in business services, financial services, advanced manufacturing, and enterprise tech. Our clients have seen an average of 25% increase in net new pipeline and 83% in reps' daily active use. Our pricing and implementation is straightforward. Our live edition is free and easy to sign up for. It allows you to quantify and monitor demand in your target market in real time. Our team edition is $50 per user per month and deliver sales-ready opportunities to your team in the existing workflow without any additional onboarding effort. Our Enterprise Edition is $75 per user per month and enables you to combine both internal and external signals in your CRM for advanced analytics. Put us to the test on your very own go-to-market. We welcome the opportunity to tailor your live sales playbook with your sales operations and digital transformation team. Thank you.
Thank you, Guy. Next up, we have Persado, and they unlock the power of words by combining words with data. Please welcome Dawn to tell us how their AI generates the most powerful marketing messages.
My name is Don Selm, Head of New Accounts here at Persado. I want to thank you today for joining me to learn more about Persado, and not just that words matter, the magnitude of impact that the right words and phrases can have. We see that by using Persado, most customers can drive over 40% increase in conversion on average. Fast Company recently recognized us as one of the most innovative companies. Now, humans working on their own have a limited set of information fighting human bias. What Persado is looking to do is how do we give you superpowers so that you have more objective data and analytics to make better decisions, to put together better creative that ultimately will make you more money. So we do that by starting with that human creative. What's the best thing that you have, understanding your brand voice, and then marrying that with the world's largest language database, which has over 1 million tagged words and phrases, categorized and scored based on performance and emotional content. Then layering on top of that, step 2 is we're going to use machine learning to take your original piece of creative and that data to semantically rewrite it. And then step 3 is we're going to go use your existing MarTech stack to go set up experimental design to go validate those machine generated piece of creatives are going to drive higher engagement with your audience. When you put those 3 things together, on average, the Persado creative wins 97% of the time, driving a 41% increase in conversion. So we're going to go through a few examples here. Here we start with the email subject line, both of them focusing on no-cost mortgage review. However, the results dramatically different. 35% increase in conversions. But we're not just stopping at the subject line. Let's go through and do the email body. Now you see the headlines look pretty different, but other than that, pretty similar. However, results again, 37% increase in conversions working on the email body. Compounding with the subject line, 84% increase in conversion. That's through changing the headline, subhead, call to action, etc. But there's still more to do. Let's go look at the web page. Both seem very human, but the Persado variant drives 20% increase in conversions. Marrying that or compounding that with the subject line and body, that's 120% increase in lifts. You can send half as many emails and still end up with more applications at the end of the day. So the beauty of this is making sure that every creative that goes out the door, that Persado can optimize it, because otherwise you're literally leaving money on the table. And not only are we identifying the right language for that creative, we're also providing you insights into what's getting your customers to engage and disengage, so that we can leverage that next time to come up with and continually improve and get better, as well as you can use in other areas where you're not using Persado yet. So in summary, I want to thank you for joining me. But really, as you think of any creative that's going out the door, there's an opportunity for Persado to go optimize it. We work across products. We talked about mortgage, but credit cards, checking accounts, etc., all applicable across a variety of channels and across teams. Again, I want to thank you for your time today. If you have any questions, please feel free to reach out to myself or any member of my team.
Thank you so much, Don. So I'd like to congratulate this next company on recently closing an oversubscribed $9.5 million round. So congrats to the Attunely team. Attunely offers a proven, compliant, and trustworthy ML platform that makes the recovery of receivables easy. Please welcome Scott.
Good morning. My name is Scott Ferris. I'm the founder and CEO of Attunely, and I'm here to tell you about how we've built a machine learning platform that makes the recovery of revenue seamless, easily, and profitable. And it's based on my early pioneering days in the internet advertising world, where we pioneered a dynamic ad insertion technology for placing targeted ads at the moment a consumer renders a web page to their browser. So when you think about Attunely, one of the first things I wanted to do was to take deep experience and domain experience in technology and blend it with people who have domain experience in the credit ecosystem, folks who have been in the world of debt financing and collections. And to combine, we have over 157 years of experience at the Attunely leadership level. When we talk with clients early stage, we learned that they have a challenge in managing lifetime value. And really knowing their customer once they actually experience a default with that consumer. They do a great job in managing the marketing funnel and underwriting and approving credit. And once they hit a default event, they typically send it to an internal team that is a specialist team to try to recover on that revenue. But when they charge off and send it to the third-party collection industry, it goes sort of into a black hole and they do not know their customer. So what we've done is started in the collection agency world first, and we've built a platform to help them recover on revenue and ingest a lot of de-identified behavioral data that is now being applied to managing further upstream in the lifetime value. When we think about how we look at our service, we take three distinct data feeds: placement data, de-identified behavioral data, and then economic data that we've built. All of these three data feeds are de-identified and non-PII data sources. We put them in a container in the cloud, and we custom train a model that is designed to exhaust dynamic scores. And these scores typically are dynamically processed either in real time or overnight. Think of it like a financial health score on the propensity to pay, the expected liquidation value of a specific consumer, and then what's the right omni-channel or communications modality to engage with that consumer to have the positive impact on liquidation and revenue recovery. We've proven out the value of this when you compare it to a traditional credit score, which is typically used by most creditor lenders and collection agencies. When you plot the dynamic machine learning score of Attunely against a static credit score, it's much more predictive in terms of predicting propensity and liquidation. And then obviously we're capturing this evolution of the consumer behavior over time, as illustrated on the right, where you take a static credit score, which is that red line, and we plotted a similar credit score with two different accounts running through the dynamic scores of Attunely, and you can see how it evolves over time. So we're trying to capture what's the right way to engage with this consumer at a particular point in time to have the highest impact on recovery. We've now amassed a corpus of data, which is the largest data set of delinquency consumers across every imaginable asset class. We're at 1.5 billion interactions, and it represents 120 million consumers. So now we're in a place where we can begin to start innovating on models and helping our clients know their customers further upstream in loan servicing and pre-charge-off. And then we've proven out the efficacy through control group tests. On the left, we're showing the efficacy against a incumbent credit score provider. And on the right, we're showing how you can really precision segment accounts based on the derived value of those accounts and fitting that into a limited capacity in your call center. This is obviously becoming much more important with the impact of COVID and the high correlation of delinquency to unemployment. And then, when you look at the funding update of Attunely, we started in stealth mode with an initial seed capital raise of $4.8 million. We then consulted with our creditors, lenders, and collection agency clients to perfect the platform and the dynamic scores before we actually launched in the seed extension in October 2019. And then we recently closed a $9.4 million oversubscribed Series A round. So we're very well prepared now to scale the platform and service the 150 clients that we're now consulting with. So I'll be happy to answer any questions in the Q&A, and thank you very much for your time.
Great, thank you so much, Scott. Next up, we have Keyless Technology, and they're building the world's first privacy-preserving biometric authentication and personal identity management platform.
Hello, everyone. My name is Fabian. I'm a co-founder and COO of Keyless. We are a deep tech cybersecurity company building privacy-preserving biometric authentication solutions that are based on more than 10 years of research in biometrics and cryptography. As a team, we set out on a mission to enable anyone to seamlessly access any digital service from any device while keeping your personal data safe, private, and under your control, which leads us into the problem. Authentication and identity management are fundamentally broken, which all goes back to that long-lasting trade-off of user experience and convenience on the one side and privacy and security on the other. But we've come from passwords over hard tokens to soft tokens and SMS two-factor authentication to local biometrics, as we know it from Apple's Touch or Face ID systems, to a future that we at Keyless see private, where we introduce the world's first zero-knowledge biometric authentication platform, combining privacy-enhancing technologies with machine learning and multimodal biometrics that make a platform that eliminates the need for businesses to store and manage passwords, cryptographic keys, biometrics, and other sensitive personal information without compromising on convenience and privacy for the user. Where as an individual, there's nothing you need to remember. You authenticate with who you are. You remain in control of your data, which in turn means that this is compliant to privacy regulations such as GDPR. In fact, far exceeds these requirements as we are not processing any personal identifiable information, even though we're doing biometric authentication that we can achieve through a novel distributed approach to biometric authentication based on a cryptographic technique called secure multi-party computation that enables us to unify the experience across all devices, independent of the underlying hardware or operating system, not storing any data on the user's device, nor in any central point on the architecture. And we're able to recombine the user's private key to perform actions such as authentication in a multi-factor setting where we have the user's device, again, any device you wish to use, the user's face as a physical biometric, ensuring the liveness of the user in passive ways. And we will soon introduce behavioral characteristics such as keystrokes or swipes as an added layer of security without interrupting the user experience by any means. Where we offer products for workforce authentication as a frictionless or single sign-on or MFA, VPN authentication, workstation login, and VDI or RDP authentication. And on the consumer side, in the form of our own app for customer MFA or through an SDK, again, available on any platforms that offers PSD2 and GDPR compliant strong customer authentication with a simple look in any front-facing camera. As a team, we have years of experience in enterprise software, cybersecurity, and our two co-founders, Paolo Gasti and Giuseppe Attinese, world-renowned academics who've been working at that intersection of biometrics and cryptography for many years in the past. We recently went live with a university in Italy, LUIS, one of the top business schools, where we helped the school authenticate their students to perform their exams in a remote setting with our technology partner, Cisco. Thank you very much for your attention. Look forward to hearing and talking to you very soon. Thank you very much.
Thank you so much. So the next company we have is going to be Switch, and Switch helps businesses identify and authenticate its users through a one-time authentication code.
Hello, my name is Hisam. I'm the Chief Development Officer at Switch. Imagine you get that dreaded call from your bank to alert you to suspicious activity on your account, that someone has bought something using your credit or debit card. You feel your blood run cold and a trickle of sweat run down the middle of your back as you hope they didn't manage to buy a Lamborghini. What's your first question? How much did they spend? After all, the amount could make a significant difference to your life. Now, in most cases, credit card fraud is covered by the bank, which is probably a good job because the amount lost to credit card fraud is $21 billion a year globally. 21 billion. The problem with cybersecurity is that we rely heavily on the use of static information and an open network. Our 16 digits card numbers, CVCs, PINs are all great examples of static information which does not change. Combination of an open network and a static nature of these important details makes them a standing target for criminal activity. As a solution, we need exactly the opposite. Firstly, take the credit card information and make it dynamic. Secondly, operate in a networkless environment. We are Switch, an authentication technology provider for businesses. The technology OTAC was created, and we now have a unique product that reduces credit card identity theft to 0. We are well protected with 42 registered patents for this awesome technology. The card looks like any other, but with 2 important differences. The first is that it has a biometric facility. You operate the card using your fingerprint. The second difference is that it has an algorithm in the card that dynamically changes the number, producing a unique variant every single time. But here's the best bit. The numbers cannot be reused. Our card dynamically generates a new number without having to go on a network. This will change the face of credit and debit card production worldwide. The scalability is truly off the chart. We are entering a $124 billion market, and the technology is transferable to other verticals such as IoT, mobility services, etc. For example, in access management, the card can be used to generate unique access codes for individuals or an employee instead of generating card numbers. In Indonesia, the public get their electricity by buying voucher codes in a prepaid system. Understandably, the government wants to move away from this, so it is doing a pilot with us. We are going through a POC process with them, and with successful POC, we will be the national standard, and we'll have a system that will allow people to generate secure codes for its 350 million electricity meters by 2024. OTAC is unique. There's no other technology in the world that is able to function the way we function. Which brings me neatly onto the investment opportunity for you. We are currently raising Series A and are raising $10 million in total. This will be used to expand all areas of the business, HR, marketing, and sales channels. But please note, $5 million has already been raised, which only leaves $5 million. So please move quickly if you want to get onto this astonishing business at this level. We are an innovation enabler. We provide our technology OTAC to other businesses in the form of API and SDK, so that those businesses can provide more unique businesses to their customers and bring positive disruption to the world. Our ability to provide security is at the heart of what we do. We have coined the phrase oxygen in all authentication. No one pays attention to oxygen, but it is essential to our existence. We will be the same, providing that all-important security that no one really notices, but is critical in the cyber world. Thank you.
Thank you. All right, last but not least, the last startup for today is going to be Unum ID, and they're the world's first sherified identity platform. The company was founded by the McCartney brothers in 2016 while they were both studying at Stanford, which is a fun fact. To learn what sherified means, please stay tuned.
This is me logging into the Acme website using Acme's mobile app. Painless multi-factor authentication in a fraction of a second with no password. Modern financial services manage thousands of employees, millions of users, and billions of transactions across dozens of geographies. Regulations and business needs force them to collect vast amounts of sensitive personal data and store it in central databases. Data breaches are up nearly 300% year over year, and 4 of 5 of them are caused by compromised passwords, which attackers obtain through social engineering attacks like phishing and SIM swapping. This is a club you don't want to join. The COVID-19 pandemic has dramatically worsened these problems. Users are interacting with financial services online more than ever before. And yet today, authentication is a mess. Unum ID has a solution. The end of, I better not tell you my password, painless multi-factor authentication with no shared secrets. You just add our software to your mobile app and it works behind the scenes on top of your existing infrastructure. To log in, the user simply uses their phone and passes a biometric check. In the background, Unum ID uses asymmetric cryptography tied to the secure hardware of the user's phone. There's really nothing an attacker can do. Phishing doesn't work because there's nothing to phish, no password or other shared secret. Even better, the authentication is bidirectional. You authenticate the user, and the user also authenticates you. SIM swapping fails also. The user's identity is tied to their physical phone, not their phone number. So redirecting a phone number doesn't do anything. It's the convenience of Face ID everywhere, with even higher security. And it works for both users and employees across all of their devices and workstations. It even works on support calls and in person. Your kids don't know what floppy disks are. Their kids won't know what passwords are. As a financial service, you're sitting on a gold mine, not just of money, but of verified personal data. Everyone wants it, both bad actors and other companies who need faster user onboarding. We just showed you how Unum ID helps you protect the gold mine from theft through passwordless authentication. Now we'll show you how Unum ID lets you put the gold to use. We call it sharified identity. Digital identity today is a mess. IAM systems are siloed. Okta and Active Directory instances often don't talk to each other, leading to fragmented user and employee accounts. Verifying identity online is expensive, slow, and very prone to fraud, which leads to low account opening rates and churn. And especially with COVID-19, large institutions are being outcompeted by small fintechs with mobile-first solutions. Unum ID transforms your mobile app into a virtual ID card. It securely stores a person's identity data and lets them instantly share it across business units, partners, and beyond. It's a single source of truth for who a user or employee is. Let's see this in action. To create an account with this fintech company, Hooli, normally I'd have to go through manual data entry and a KYC process that would take anywhere from 10 minutes to several days. But with Unum ID, I can create an account instantly. I just click Verify with Acme and do a biometric check in the Acme app. This has all of the security benefits of the passwordless authentication we showed you before, but now I'm sharing much richer data, in this case, a full KYC verification. It's like login with Google and login with Facebook. You would never delete your Facebook account because it's the access point for so many of the services you use. With Unum ID, you can put Verify with your company buttons all over the web with complete control over where your users can and can't share their data. Importantly, each user stores their own data on their device, and the data is never shared without their consent. We built Unum ID for a GDPR world. This makes you essential far beyond finance. It puts your goldmine of verified personal data to use. I founded Unum ID with my brother Aiden while both of us were at Stanford. We left to build this company because we believe digital identity will unlock a vast new wave of transformation. We have an amazing group of advisors, and we're backed by Samsung, Draper Associates, Stanford professors, Franklin Templeton, and many more. What could you do with Unum ID? Join us. Sharified identity is the future.
Thank you so much, Liam. And with that, we wrap up today's startup presentations. Apologies for going a little bit over time, but thank you for being with us. Yeah, we hope you enjoyed these quick pitches and learned a little bit more about the technologies shaping the future of the financial industry. On behalf of myself and the FinTech team, I would like to thank all of our Batch 12 companies for being a part of our program for these past 3 months. It's been an absolute pleasure working with all of you, and I look forward to staying in touch. Before we get started with the award ceremony, I'd like to give a huge thank you and shout out to all the mentors that have helped shape our program. Thank you for taking time out of your busy lives to give invaluable feedback and advice to our startups, host workshops, and even speak at our events. We appreciate every single one of you. Thank you so much. Moving on to our corporate awards. This batch, we'd like to nominate Principal Financial and William Blair to receive our Corporate Innovation Awards. Since joining in 2016, Principal has reviewed over 500 companies, had 13 deal flows, did over 14 POCs, participated in workshops and roundtables, attended all our virtual events this batch, and brought different people from their team to Plug and Play to better understand innovation and make a cultural change within their organization. Please welcome Bruce Henschel.
Thank you for the recognition. This award is meaningful because innovation is what helps us to successfully implement our purpose, a purpose of fostering a world where financial security is accessible to all. At Principal, we're motivated by the reality that millions of people lack access, the opportunity, and the confidence to achieve their financial goals. So, as we look for new ways to foster financial security, innovation provides avenues to solve problems, to create new value for our customers, and to evolve our business. Startups provide valuable exposure to fresh ideas, new ways of thinking, and different approaches to work, supplementing the great work done by our own employees around the world in meeting the needs of our customers. We believe that all of our employees have a role to play in innovation. That's why leveraging the plug-and-play ecosystem is so valuable, because it allows us to engage a broader set of teams across our organization for greater diversity of thought, talent, and background. You know, looking back to early 2020, when the pandemic first set in, we leaned heavily into our relationship with Plug and Play to accelerate our activities in order to meet the increased challenges faced by our customers, finding ways to address their needs at a time when meeting them face-to-face may be critical, but just not possible. And we did it by engaging startups for solutions around electronic health records, digital payments, and online notarizations, to name a few. Looking ahead, we're planning to continue to grow our internal bench of innovators, both formally and informally, because we know that transformational ideas can come from anywhere. We'll continue to help our customers navigate much of the change and uncertainty that we've seen throughout 2020, including recovery from the global pandemic, as well as the longer-term trends that influence our customers' ability to earn, save, and protect their financial futures. We will also look for stronger connections among our corporate peers within the plug-and-play ecosystem, finding ways to partner and to learn, and finding the best and most creative startups to help us solve our complex challenges. Again, thank you for this honor.
Thank you so much. Our other corporate award will go to William Blair, and they'll be receiving the award as they've been highly engaged as an anchor partner with 3 POCs, 12 deal flows, and going live with one of our startups, AlphaSense. They've shown high participation in innovation workshops, plug-and-play virtual events, and partner-to-partner connections. Please welcome Christina Blaszek.
We're proud to be recognized by Plug and Play Fintech for our commitment to identifying and supporting the best innovations for our investment management clients. The award reinforces our commitment to creating and promoting a culture of innovation. At William Blair, we believe that diverse ideas drive innovation, help broaden our peripheral vision, and motivate our employees to be intellectually curious. It is exciting to engage with these innovative teams and access new technological expertise to improve insights, enhance decision-making, and proactively connect with clients and prospects. Further, working with startups allows us to accelerate growth and increase the speed and pace of innovation as we look to the future. The team at Plug and Play has done a great job of helping to match us up with startups based on our unique needs and expectations. Thank you.
Wonderful, thank you so much. So this wraps up the Zoom portion of today's event. Please use the link that we're about to post in the chat or your calendar invite to head over to Remo. There's no download necessary. It's really just a website. All you have to do is enable your camera. And please use your Chrome browser or your laptop. It's not very mobile friendly. I'll be heading there in just 1 second. We'll have Travel join us soon on floor 2. So please make sure you stay on floor 1 if you want to mingle with our startups. Every company will have a demo table. And yeah, I'll be heading over in just a second to give you an overview of the platform and make you feel almost as comfortable as an in-person event. Thank you everyone so much for joining us for today's FinTech Expo. And I look forward to seeing you all on Remo. Thank you so much.